The COVID-19 pandemic has affected all small businesses in the U.S. Virgin Islands, but there is help to move your business forward. The Virgin Islands Small Business Development Center is available to assist entrepreneurs and small businesses. The VISBDC is the territory's #1 resource for small businesses and is sustained by the University of the Virgin Islands and the U.S. Small Business Administration. The VISBDC is nationally accredited and provides one-on-one advising, business education training, and technical assistance at no cost. Attend workshops by experts from both the public and private sectors. From idea generation to exit strategies, the staff at the VISBDC are ready to assist you. So don't wait. Call, email, or visit them on the web at www.visbdc.org and Facebook, or simply download their mobile app on the Apple or Google Play Store. Just search VISBDC. Discover how they can help your business grow and succeed.
Welcome to the VISBDC Financial Literacy Series in collaboration with local lender FirstBank VI. This series was created to engage participants in the highly requested area of financial literacy for small business owners. Furthermore, this webinar is designed for entrepreneurs and small business owners alike to learn the basics of accounting and bookkeeping from a banking professional. Today's presenter is Valdamier Collens, Senior Vice President of the USVI Region Director for FirstBank VI. He was appointed in September of 2019. As USVI Region Director, Director Collins is in charge of spearheading and continuing FirstBank's strategic growth in the USVI business operations on St. Thomas, St. John, and St. Croix. He has over 20 years of experience and knowledge in both the public and private sectors. He has demonstrated successful leadership and accomplishments in financial planning and analysis, financial reporting, economic and strategic planning and modeling to drive organizational results. Prior to his FirstBank career, Director Collins worked for the government of the Virgin Islands, where he held various executive positions until assuming the role of Commissioner of Finance and Executive Director of the Virgin Islands Public Finance Authority in 2015. Director Collins is also a certified public accountant with a master's degree in business administration from Harvard Business School in Boston, Massachusetts. Just a friendly reminder to put your questions in the chat and they will be addressed by the presenting team later in the chat or during the question and answer segment. A copy of the presentation is available upon email request to info@visbdc.org, and it would also be accessible in the chat during the webinar. We encourage you to take a few minutes after this training to fill out the survey and let us know how we are doing. Without further ado, USVI Region Director Collins for FirstBank VI, the floor is yours.
Good morning, and thank you for that warm introduction. I'd like at this moment to thank the VI Small Business Development Center for allowing FirstBank to provide the participants of this program with an overview of the foundations of accounting, otherwise known as Accounting 101. I'd also like to thank the participants as well for allowing me to provide you with some of the fundamentals that are going to be important to your entrepreneurial spirit as you go forward. So without further ado, I'll proceed with the presentation and first provide you with an overview of what we're going to cover today. So the presentation is broken down in 9 steps. And so steps 1 and 2 will be talking about organizational documentation, basics such as how to register your business, what type of companies are available to protect your business. Then we'll jump in to financials. This is going to become very important and requires a lot of discipline in order for you to make good decisions about where you want to go with your business. And lastly, the last two steps will jump in very briefly on some important concepts with respect to analyzing the results of your financial statements. So ultimately, you will be registering your business here in the U.S. Virgin Islands with the Department of Licensing and Consumer Affairs. This is critical so that you meet the local laws as it relates to having your business properly registered in the U.S. Virgin Islands. But before you do that, you're most likely going to make a stop to the office of the Lieutenant Governor's office. There is where you will register the type of corporation that you will assume in order to manage your business. So let's talk about some of those businesses. Many of you right now are probably set up as a sole proprietorship. What that simply means is that at the end of every year, you would file what's called a Schedule C to accompany your 1040 that you file regularly each April 15th. The difficulty with being an unincorporated business, which is essentially what a sole proprietorship is that it doesn't provide you with a limitation on liability. And what a limitation on liability means very simply is that if something legally were to go awry with your business, and let's just say you find yourself in court or being sued, the plaintiff suing your business would have the opportunity to come after your personal assets. And so to the extent possible, you want to elevate your business from a sole proprietorship to some of the other entities that I'll discuss going forward. The more, how should I say, the more preferred option is to protect yourself from liability. And I'm saying personally, that means your house, your car, your boat, whatever you own, by forming, for example, a limited liability corporation. Now, this type of entity is similar to a sole proprietorship, but again, it provides you with that protection against lawsuits that invariably will come in one form or another, but when you're protected under an LLC or a limited liability company, the lawsuit is specific to that company and does not come after your assets. In this sort of scenario, it is similar to a sole proprietorship. At the end of every year, you or your tax preparer would simply attach the appropriate form. Most times it's what's called a K1, and that K1 would essentially include all of your revenues and expenses. And the good thing about a limited liability is that you will be taxed at your personal income rates. A second option, of course, if there are two or more people that have ownership of the business, is you can establish a partnership with your business owner. This is a very popular means of structuring your company But I have to, I have to say that with a partnership, it's similar to a sole proprietorship in that it doesn't protect you from legal liability. That means that if someone were to sue a partnership, they could come after the personal assets of either of the owners of that business. And then lastly, there is the corporation. The corporation is a separate legal entity, and it is taxed as such. There are different rates associated with corporations. And so corporations can become, in order to establish them, they can become very sort of expensive and complex. And there are various rules as it relates to, meetings, annual meetings and all, and those kind of things that go along with a corporation. But it is a viable opportunity. And I must say that out of the four that you see here, the easiest to establish are the limited liability company and the partnership. And in fact, most of you can follow the paperwork. But if you want to be very careful, I would also recommend hiring a legal professional to help you walk through the paperwork. So again, in summary, this actually will be your first step before you even reach to the Division of Licensing and Consumer Affairs to establish a registration of the business. You'll have to work through the Lieutenant Governor's office to, pretty much register as a sole proprietorship, limited liability company, partnership, and corporation. And again, the biggest thing about any of these entities is protecting your personal assets, which a limited liability company does, and a corporation does better than a sole proprietorship and a partnership. Now, let's move along to how, the importance of managing the financial aspects of your business. The first, after you register your company, and even now, as if you're a sole proprietorship, you want to open a separate bank account for your business such that you can manage the business finances of your entity separately from your personal. In fact, most banks, if they get an indication based on your profile that you're placing an inordinate amount of business income or business expense flowing through your personal account, the bank will more than likely contact you to verify if that is the case, and encourage you just based on bank regulations that a separate commercial account would need to be established. But again, you want to do that anyway because it allows you and or your bookkeeper to monitor the revenues that are coming in, the expenses that are going out with relative ease. And one of the things that I'll emphasize about a bank account now and when we close out our discussion today is that you want to reconcile your bank accounts on a monthly basis. Reconciliation is similar to what we all learned when we opened up our first bank accounts, and we would keep track of the monies going in and out in a check register. It is the only way that you are going to be able to validate, whether or not there's fraudulent activity, whether or not all of your revenues and your expenditures are fully accounted for. And of course, you want to monitor the fees that banks are going to charge you. So you want to keep an eye on banks as well. So the types of accounts you'd likely want to open is a business checking account. I just mentioned that. This is where it'll be able to capture all of the income or revenues of the business, as well as pay your business expenses. You may want to, while you're opening up a checking account, simultaneously open up a savings account as well. So a business savings account is very instrumental in allowing you to save, because most of you, I'm sure, have a business plan, and certainly you're going to need to save money for your tax payments. If you're a sole proprietor, of course, you have to pay self-employment tax. And if you're trying to manage and grow your business, you want to put away a sum of money based on that plan to reach your goals in terms, whether it's capital improvements or buying new equipment and so on and so forth. I always tell customers as well, if you can go for the trifecta and open up a business credit card at the same time you're opening up your checking account, that also works well. Obviously, you want to be in good credit standing to be able to open up a business credit card. But as I'll mention later on, when it comes to buying inventory and growing your business, you're going to need credit at some point in time, such that you can keep up with the demands of your business. And so, again, just to summarize here, at a minimum, you certainly want to open up a business checking account and complement that with a savings account and credit card to help you manage and grow your business. Critical to your success in managing and growing your business is choosing an accounting method, a method that you will use. Okay, and that accounting method not only is going to be useful for you in your day-to-day or month-to-month, quarterly, so on and so forth, analysis of where you are and where you want to be, but it may or may not be the same method that you will use for tax reporting purposes. And the two most common accounting methods is cash basis accounting and accrual accounting. So cash basis accounting is the most easiest for you to understand, because you would only record your revenues and or your expenses when they're received and or paid. This is typically used for most people, like freelancers and like yourself, entrepreneurs, and it's the most simple. The more accurate way of measuring your revenues and expenses is the accrual basis of accounting. So what this basis of accounting says is that you should measure your revenues when it's earned, not necessarily when you receive it, and record your expenses when they are incurred. And that may not be necessarily when the money's actually received or paid. Again, just to emphasize, this is the more accurate way of measuring your income and expenses. Banks prefer accrual basis, although they'll, if you're cash basis, they can understand that as well. But for you and for your decision-making purposes, I would highly encourage you to consider, utilizing the accrual basis of accounting. Next is tracking your business transactions. These are your expenses. And the key here about tracking your expenses is identifying the frequency by which you want to track this information. I believe at a minimum, and this, I would also argue this also goes for your revenues as well. I would argue that you want to track your revenues and your expenses at least twice a week, because it really encourages the discipline that you need in order to obtain the information that you're going to require for future decision-making of your business. So it is definitely an ongoing task. Of course, most businesses have an accountant and or they may choose to outsource. So there are various ways in which you can do this, which we'll talk about now. So you can do it yourself, right? As I was just indicating, managing it using tools such as QuickBooks or Quicken, if you are, familiar with those products. And if you're just starting out, you can also use Excel to track your revenues and expenses. But at some point, you'd have to elevate yourself from Excel because it doesn't understand the basics about accounting for transactions. So, and either of the options under the do-it-yourself provides you with buying the software outright. Software nowadays can cost anywhere from about $300 to $500, or you can subscribe to the software using cloud-based bookkeeping. And so either one of the options, whether you use QuickBooks or Quicken, even Excel, you can buy the software outright and or pay for it monthly on a subscription basis via the cloud. The other option is you can outsource bookkeeping. But again, for any of what I'm going to mention to you, you want to make sure you establish a disciplined frequency for which you're going to be, for which you want to have the information put into your system. And so if you go the outsourcing route, obviously you can hire a CPA, you can hire a bookkeeper, somebody that does this on a part-time basis, but it's up to you. But most likely, just keep in mind, whether you hire a CPA or bookkeeper, they're most likely using some of the software packages that I mentioned to you in the do-it-yourself option. As your business continues to grow, you may decide that you want to have the information, more closer to you, and you probably hire in-house or have someone that has the skill set to record information. And so hiring in-house your own bookkeeper, accountant, to help you manage this aspect of your business is also a viable option. As I mentioned earlier about, the bank accounts, at some point you will have to separate your personal bank account from your business account. It's clearly going to assist you in separating your personal expenses from your business expenses. And so again, just to reemphasize, you want to have that dedicated bank account so that the tracking of the information is easier. But key to all of this tracking of information is all of that data turns into, and I'll summarize it at the end, profit and loss statements, balance sheets, statement of cash flows, which we'll talk about those later on in the conversation. But those statements are critical for you as a business owner to making the right decisions about managing and growing your business. Again, I'll state again that the two that I've said, and there are many other software programs out there outside of Quicken and QuickBooks, but you certainly want to make that decision sooner rather than later to automate the process and streamline the way in which you are recording information. You know, as you continue to grow and manage your business, you are going to decide how you want to get paid. And what that simply means is, are you going to utilize just cash? Are you a straight cash business? Or do you want to complement your business by offering, you know, the viability of your customers paying by debit card, paying by credit cards? So that's up to you, but just know for certain, once you complement cash with debit cards and credit cards, there are fees associated with having the machines. There are fees associated on a transactional basis, and you know, the timing of when those credit transactions come in, you want to keep track of that. You know, oftentimes, you know, those credit transactions that you will perform will close within a reasonable amount of time, maybe next business day or 2 business days thereafter. But having that functionality or availability as a payment option will work to your advantage in terms of growing your business. So you can't manage and grow your business, receive credit cards, cash, and all of that without thinking about the Virgin Islands Bureau of Internal Revenue. And I touched lightly on the how should I say, the sole proprietor side. The sole proprietor side of the business requires you as a business owner to pay what's called self-employment tax. And you know, the Bureau of Internal Revenue would, you know, has the necessary forms to pay your self-employment tax. But if you choose some of the other forms of business, you will be most likely paying estimated taxes from a federal income tax standpoint. If you have employees, you will be paying what's called FICA. And the current rate on FICA, which hasn't changed for a long time, is about 7.665%. It's made up of Social Security and Medicare. But paying your taxes in a timely basis is critical. And so, as I just mentioned, income tax, whether it be on the sole proprietor side or from a corporation, estimated is critical. And the thing about it is that it must be timely, else you will be assessed interest and penalties by the Bureau of Internal Revenue. Self-employment tax, again, that is limited to you know, sole proprietors, and it's the equivalent of the Social Security and Medicare benefits that you would have paid if you were a bona fide employee. And then you know, as I mentioned briefly, there's employment tax, like the FICA Federal Insurance Contribution Acts, that includes the same Social Security and Medicare. You know, there are other agencies just that some of you might be aware of that you would be paying tax. You've got to pay unemployment tax to the Department of Labor. And obviously, if you make a profit, you will be paying taxes on that profit. I talked a lot about, through the discussion today, about you making critical decisions about your business. One of the more critical decisions that you are going to be making is, you know, am I doing well as it relates to the gross margins that I anticipated in my business plan? And you know, most of you in developing your business plans have an idea of what type of gross margin percentage that you are looking to achieve in comparison to other businesses in your market. But just to go over very quickly, the gross margin itself is typically just your revenues minus your cost of goods sold. If you're in a business of purchasing inventory and selling inventory, cost of goods sold is very important to you. And how you determine that cost of goods sold is, obviously you take your beginning inventory, you add your purchases to that, so you come up with your available, inventory for sale, and then you would then subtract your ending inventory from what's available to determine the cost of goods sold. It's very, very simple formula. Again, I'll just go over that again. Beginning inventory plus purchases minus ending inventory gives you the cost of goods sold. And so to get your gross margin percentage, you would just take your revenues minus your cost of goods sold and divide that by your revenues. And in some businesses, a 30% margin may be good, a 40% margin may be good. It all depends on your particular business. And it all depends on what you put into your business plan. And it's important that you monitor your gross margins to determine whether or not you're meeting the expectations of your business plan. And so I can't express the importance of the gross margin in any business. It's very important. It's particularly now when you see where oil and gas prices are going, where inflation is going. Your business plans that you have developed was developed at a particular point in time, and you want to be able to compare what gross margins in real time that you are actually achieving against what you had projected. So just to start to wrap this presentation up, there are some key reports or documents that you want to become familiar with very quickly so that you can make decisions about whether or not you are achieving your goals. And these 5 reports or documents that whether you outsource or whether you're doing it yourself, or you have an in-house resource that's preparing this information for you, you want to keep track of the information being presented on these reports on at least a monthly basis. So those 5 reports are the income statements, which essentially will show you, how you're doing from a profitability standpoint. It's going to provide you with your gross margins. It's going to show you, all your expenses and revenues in a detailed format, so that you can, ascertain whether or not you are spending too much or not getting in as much as you anticipated. So income statement, beyond a shadow of a doubt, is really important to monitoring your profitability. Second important document or report that comes out of these systems that I mentioned is your balance sheet. Your balance sheet is your assets, liability, and net worth of your business. And it will provide you with those assets and liabilities at any particular point in time. Again, at a minimum, you want to ensure that you are you want to see increased equity, and that increased equity only comes from profits that are being flowed from the income statement into the balance sheet. And so the balance sheet is really, really important to you. Profit and loss is just another way of saying income statement, but it's important that we mention it here. But the profit and loss, or P&L, is exactly the same as the income statement that I mentioned. The statement of cash flow or cash flow statement provides you with information on how you're spending money in 3 areas. Where cash is going in terms of operations, where cash is going in terms of investment activity, and where the cash is going in or out as it relates to financing. And typically at the end of the cash flow statement, it will balance directly to the cash amount that's on the balance sheet. And so I get a lot of value out of looking at a cash flow statement more than a profit and loss statement, because again, at a very high level, I could tell whether or not a business is making money from operations, which is what you want to do, or if most of the money that's coming into their business is coming from investment, outside investment, or financing activities. Obviously, if you are looking or seeking a loan from a bank or other financial institution, they're going to be looking very heavily at the statement of cash flow, and they're going to be looking very heavily within that statement of cash flow on whether or not your cash is coming from business operations. And then finally, really important, as I mentioned early on, is the bank reconciliation. Bank reconciliations you must do every month. Again, it gives you the comfort of knowing that all of your revenues and expenditures, including bank fees, are being properly accounted for. And it prevents you from fraudulent activities. And so I would, again, emphasize that this creates a level of discipline to not only make sure all of the information is captured, but it also gives you a very detailed look on whether or not there's anything going awry in your business. And so I've reached the end of the presentation. I think hopefully I've provided you with some foundational level information as to how to manage your business, from registering your business to utilizing different accounting software that will provide you with the information to assess how well you are doing as a business owner. So I'd like to thank each and every one of you for your time, and I, at this moment, am open to questions.
Okay, so while we wait for questions to be placed in the chat, I'll just go ahead and let everyone know with this slide up. You can put it back up. The VI SBDC has so much more in store for USVI small businesses. You can visit our website at www.visbdc.org. Director Collins, you can go ahead and pull back up the slide so they can access our website and social media platforms. So we want to encourage participants to download the VI SBDC app on your mobile device from the appropriate app store. Like and follow us on Facebook, Instagram, Twitter, Google My Business, and subscribe to the VI SBDC YouTube channel for new uploads of our on-demand webinars. Webinars such as today will be available at a later date. I still don't see any questions as yet, so I'm still giving everyone time. So in terms of our upcoming webinars, we're continuing this series on the 19th at 11 a.m. And so we'll have FirstBank back, and they'll be presenting on applying for a business loan. And then we also have them back on the 26th at 11 a.m. And the presentation is entitled The Fundamentals of Credit. Now, outside of this financial literacy series, we have on the 20th at 11 a.m. the USVI Business Resiliency series, and we're focusing on effective marketing in 2022. On the 24th at 11 a.m., we have the Small Business Administration back with Webinar Tuesday, and they'll be presenting on disaster preparedness. And on the 25th at 11:30 a.m., we have a webinar entitled Accessible Web Design and Your Business. Okay, we have a comment stating from our Associate State Director, Ms. Karen Jones and St. Croix, excellent presentation. Very useful and helpful information for new and existing entrepreneurs. So I don't see any questions in the chat. So we want to thank everyone for attending on behalf of the entire VI SBDC network. Thank you so much and enjoy your day. Take care.